Hello everyone. In this video, we'll analyze HDFC Bank stock. We'll analyze about financial struggles, growth opportunities, recent news, and based on all these things, we'll decide do we need to buy, hold, or sell the stock. Please note that all these things is based on my analysis. Please do reach out to your financial advisor before taking any position. First of all, let us discuss about the industry overview. We'll only discuss at high level. So let us discuss how banks make money. So, whenever anyone reaches out to bank, whenever they deposit the money, bank gives some interest rate for that. And whenever anyone reaches out to bank for loans, bank charges some interest rate for that. So the difference between the two is the income for the bank. This consists of approximately 70 to 75% of the income for most of the bank. So let us suppose the interest rate that the bank gives to us is approximately 4 to 5%, and they charges 10 to 12% as an interest rate for us. So the net interest margin would be 12% minus 5%, approximately 7%. Let us discuss about HDFC Bank at high level. So HDFC Bank is the largest private sector bank in India, and it was incorporated in 1994, and this was the first private sector bank. And as most of you are aware, there is no promoter holding in the HDFC Bank. Next, we'll discuss about the fundamental analysis. We'll discuss about the positive and negative for the HDFC Bank because of the merger of HDFC. In terms of negative, if you see because of the HDFC limited merger, it has impacted the CASA ratio. Because for HDFC Bank, the CASA ratio was good, and for HDFC, the CASA ratio was not good. And as a merger, the overall CASA ratio of the HDFC Bank has deteriorated. In terms of margin also, HDFC was playing at a margin of 2 to 2.5%, but HDFC Bank was playing at a margin of 4%. And because of this merger, right now the margin of the HDFC Bank is approximately 3.5%. And the other issue that has happened in last couple of quarters with respect to the communication gap. CFO's earlier statement was that they're planning to improve on the margin, but they were not able to improve on the margin. And all these things happened given RBI has reduced or eased up the high buffer for the banks on the interest. Additionally, the CEO in October 2023 said they're confident that the deposit is never going to be an issue. But as of now, deposit is still an issue for the bank. So these were a couple of the challenges that the HDFC Bank is facing. Now coming to the growth opportunities or the potential for growth. If you look at the market share of HDFC Bank, it has been steadily growing. So from financial year 15 to financial year 2023, the market share of the bank has increased from 5% to approximately 10% in advances and deposits. Apart from that, if you see, the PSU bank right now has 65% of total deposits. So you can see the growth potential that HDFC Bank still has, given it is the largest bank in India. Apart from that, as per research, there is a correlation between the branch age and the deposits growth. So, if the branch is there in any locality, and as and when the number of years for the branch increases, the chances of deposit growth is higher. So, if you see over here, if there is any bank which is there for 10 to 15 years, then the chance of deposits or the amount of deposit in that bank is likely to be 10 times higher. And additionally, they have opened approximately 700 branches in the last quarter. There are approximately 70% of the HDFC Limited customer who is not yet a customer of HDFC Bank. So there is a huge opportunity of cross sell. In terms of the last 1 week news, there was one positive news and one negative news. In terms of positive news, the positive news was with respect to MSCI index, where the analyst is expecting that there will be an inflow of $4 billion because HDFC Bank is going to get a higher weightage in the MSCI. And why this has happened is because the FPI holding has decreased below 55%. So if the FPI holding is below 55%, then MSCI has to increase the weightage of the HDFC Bank. So that is where the inflow will come. And in terms of bad news, recently HDFC Bank gave the business update for quarter 1 financial year 2025. And if you see over here, the gross advances has declined by 0.8% quarter on quarter, and the deposits has remained same. This is not only for this quarter. So let us try to look like what happened in the previous 2 quarters. In the quarter 3 financial year 2024, if you see, the gross advances increased by 4.9% and deposits increased by 1.9%. In the quarter 4, the gross advances increased by 1.6% and deposits increased by 7.6%. So overall, if you see, the gross deposits has increased by 0% here, 1.9% and 7.5. So approximately 7.5 plus 1.9 is 9.4% in 3 quarters. And advances has increased by minus 0.5, 4.9, 4.1 plus 1.6, 5.7%. So if you see approximately 6% in advance and 9% in deposit. But overall, if you have seen HDFC Bank's growth rate, it has been steadily growing in the range of 20, 25, and 30%. But as of now, in 3 quarters, it has only increased like 6% for the advances and 9% for the deposits. The HDFC Bank is under the pressure. Apart from that, let us take a look at few of the other metrics over here. In terms of CASA ratio, as already explained, the CASA ratio has declined because of the HDFC merger. Next, as I already explained, they are trying to open the new branches across India, and in the last quarter, they have opened 647, and last quarter, 146 branches. In terms of the net interest income, as I explained earlier, like net interest income consists of 70 to 75% of the revenue, and the remaining comes from the non-interest income. Because of the merger, this is one thing good that has happened in terms of cost efficiency. Like they were able to reduce the cost. So if you see before merger, it was 42%, and after merger, it is approximately 41%. So these are the group companies of HDFC Bank. And if you look into this, all these things are into growth segment. So in terms of future potential, definitely there is a good scope. The pain can be there in the short term, but in terms of future potential, all these things holds potential. This is the industry-wise distribution. Like consumer loan consists of 33%, and then NBFC is 5.8%. In terms of top borrowers, top 20 borrowers consist of 11% of the total holding. And also, if you see, in terms of clientele, corporate clientele, 75% of the clientele has AA and above rating, which is a good news. Next, take a look at the transcript. So, what has been happening, which is not good, is the management is not able to give any clear guidelines in terms of the projected growth, because of which the investors community is not clear with respect to what will be the growth rate. Next, take a look at the financials and valuations. If you see over here, in terms of industry, first of all, let us take a look at the price to book ratio. The price to book ratio is almost at the lower level in last 10 years. P ratio is also almost at the lower level. When you compare it with the industry, it has a price to book value of 3.18, which is lower than ICICI and Kotak Bank. Same way if you look into the ROE, ROE is better as compared to almost all other banks. ROC is almost also better, which is definitely a good news. Next, if you look into the profit and loss statement, there has been no issue in the profit and loss statement, which is definitely a positive sign. Next, let us take a look at the stock analysis. So right now, stock has been trading in the same range for approximately last 3 years, and there is a beautiful cup and handle pattern forming over here. And based on this, the target is coming out to be 2150. So at this point of time, I would suggest you should not panic if you're already holding the stock. If you're not holding a stock, then you can buy some amount right now also. Otherwise, you can buy at around 1580 rupees, or the next buying price would be approximately 1400 rupees. Additionally, if you see in terms of analyst rating, all the analysts are kind of giving a buyer of a weight rating, which is more than the current price. So in terms of my take, I would suggest you can go ahead and buy the stock. If you do not have the stock, you can accumulate and also you can hold the stock. If you are trying to make any positions on this, you can reach out to your financial advisor before taking any position. If you have liked the videos, please feel free to like the video, or if you have not subscribed, please subscribe. And if you have any questions, you can let me know in the comment section. Thanks for watching. Thank you.